Hello everyone, welcome back to our US training series. My name is Haider Mushtaq, and in today's short video, we will discuss one of the most important IRS changes for tax year 2025, which taxpayers will file in tax year 2026. Our focus today is the standard deduction and how it has changed compared to tax year 2024. So, if you are a tax preparer, accounting student, CPA candidate, or simply want to understand these changes may affect taxpayers, this video is for you. So let's begin. Before we discuss the detail, let's quickly look at some major IRS changes for tax year 2025. So these includes standard deduction, federal income tax brackets, retirement contribution plans, so on. So we will discuss all these changes one by one in next couple of videos. So today we will focus specifically on standard deduction because it impacts almost every taxpayer in the United States. And now let's compare tax year 2024 and tax year 2025. But before looking at the numbers, it is important to understand what the standard deduction actually means. Many new tax preparer hear this term every day, but few can explain it in simple language. So let's simplify it. Where we can find standard deduction in the original formula. So here is the standard deduction, which is deduction deducted after from the adjusted gross income. So the standard deduction is a fixed amount allowed by the IRS that reduces a taxpayer's income before federal income tax is calculated. In some simple words, the IRS automatically allow taxpayer to deduct a certain amount from their income without providing receipts, invoices, or expenses or documentary record. This means many taxpayers do not need to itemize deduction. The IRS simply gives them a fixed deduction. So in this example, suppose a taxpayer earns $50,000, we subtract that amount from the income as a standard deduction. So after deducting this amount, we will have 35,000. It means now we need to pay a tax on 35,000 instead of 50,000 because IRS allowed us standard deduction from our taxable income. So it means a higher deduction usually means lower taxable income and potentially lower our federal income tax. According to the IRS, the standard deduction is a specifically dollar amount that reduces taxable income, and IRS publication 501 further explains that it is a benefit that eliminates the need for many taxpayers to itemize deduction. In practice, this makes tax filing easier and faster for millions of taxpayers. Excuse me. So remember the one simple rule: the standard deduction is a fixed amount provided by the IRS that automatically reduces taxable income. The higher the deduction, the lower the taxable income, and the lower the taxable income, the lower the tax liability in many situations. Now let's look at the actual changes for taxpayers filing as single. The standard deduction increased from 14,600 to 15,750, which is increased by 1,150 US dollars. The higher deduction reduces taxable income before tax rates are applied. Single taxpayer generally have narrower tax brackets than married couples, so this increase helps offset inflation and rising living cost. For married filing jointly, the deduction increased from 29,200 to 31,500, which is significantly in the numbers by 2,300. MFJ receives the largest dollar increase because it covers two taxpayers, means both spouses. This provides meaningful tax relief for working couples by lowering taxable income and reducing the likelihood of entering a higher tax bracket. For married filing separately, The deduction increased from 14,600 to 15,750, and this increased by 1,150 US dollars. Although the deduction is increased, MFS remains the least tax efficient filing status because many tax credits and deductions are limited or unavailable. The increase merely preserves purchasing power against inflation rather than creating a significant tax advantage. Taxpayers should carefully evaluate whether MFS is truly beneficial before choosing this status. And in next we have head of household. This amount is increased from 21,900 to 23,625, and this increase is by 1,725. Head of household taxpayers, often single parents or individual supporting their dependents, receive a large deduction than single filers. This reflects a US tax policy aimed at easing the financial burden of maintaining a household. So we move to our next slide. For taxpayer filing as qualifying a surviving spouse, the standard deduction increased from 29,200 to 31,500. The deduction remains equal to merit filing jointly, allowing surviving spouse to retain favorable tax treatment for a limited period after the loss of their spouse. This policy reduces the immediate tax burden during a financial difficult transition and prevents a sudden increase in tax liability. If we summarize all filing statuses, we can see a common pattern, that every filing status receive an increase in their standard deduction. Single and married filing separately increase by 1,150. Married filing jointly and qualifying surviving spouse, their standard deduction is increased by 2,300. Head of household increased by 1,725. Let's discuss what these changes actually means. First, all filing statuses increase by approximately 7.9%. Secondly, a higher deduction means lower taxable income. And third, most taxpayer benefits automatically without doing anything. In fact, the majority of taxpayers claim their standard deduction rather than itemizing deduction. So these changes affect millions of taxpayers across the country. So these are also some important planning consideration, like a middle income household generally receive the greatest practical benefit as the standard deduction becomes larger. Itemizing deduction becomes less attractive for many taxpayers. So tax professionals should also review their clients' tax strategies with withholding calculations, estimated tax payments, charitable contribution, and deduction planning opportunities. Excuse me. So, what is the big takeaway? All filing statuses receive approximately 7.9% increase. This means taxpayer can generally reduce more income before federal income tax is calculated. So, the primary purpose of this increase is to help offset inflation and provide additional tax relief across the country. Before we finish, let's remember four important points. Number one, tax rates remain unchanged. We will discuss this in detail in next coming videos. Bracket threshold increased for inflation, so the standard deduction also increased against this inflation. And the number four is tax planning opportunities still exist through deductions, tax credits, retirement contribution, and proper filing status selection. So it depends or vary case to case. These areas continue to be important for tax preparers and tax preparers alike. So thank you for staying with me until the end of this video. I hope this explanation help you understand the standard deduction changes for tax year 2025 in a very simple and practical way. If you found this video useful, please like, share, and follow for more US tax training content. Thank you so much, and I will see you in next video. Goodbye.